to our post-week market review. So where the market opened up, which is going to be this candlestick right here. We obviously spoke about this in our midweek technical analysis. So there's not too much to go over other than the fact that we saw this enormous bearish drop with price finally finding support at around the level of 3,895. And then from there, price continued all the way up, and then we started testing in and around this area here. As you can see, we actually marked up this chart. We sort of marked up this area after we saw this sort of bullish move out of these lows here. So we'll go from where we last left off. So we established that price was finding and acting at this level as somewhat of a resistance. The reason we saw that was because of the simple price action. So you can see there's enormous bullish candlesticks pushing up, and then you see sort of that final candlestick, and then from there we saw lower time frame consolidation, and we can see that because price is just sort of moving sideways, and you can see the volume within these candlesticks, these four candlesticks, are lower or less in comparison to this bullish push up to this level. And if you remember, we did speak about a little bullish engulfing, or should I say bearish engulfing pattern. So we had our A candlestick, our B candlestick, which is our engulfing candlestick, and then our entry candlestick. So as we spoke about in our midweek, could have taken a nice short position there, a nice sort of swing trade, and carried it down to the next point of interest, even further if you really wanted to. But yeah, nice little indication for us traders when we were watching the market. Once we saw price sort of open up and create this candlestick at around 3 o'clock on Wednesday, we saw price break through this level and then continue on bearish. As you can see, we marked in a couple possible moves that we could see take place. We understood that this level here, one of our points of interest at around 3,975, we first established this level as a possible area of support that we'd see price reject off of. However, as you can see, price completely soared past this level, and then we started to find a support at our sort of secondary arrow, which is the second level that we expected price to find support at, and as you can see, it did at around the level of 3,945. From there, then, we have seen price continue on bullish. So we tested these levels and then we push up above this point of control that we established. Price came to this level of 3,975. We tested that a couple of times before we saw that break. Price came just below it one more time. And then throughout the New York session on Thursday, all the way up until about sort of midnight or 11 p.m. GMT, so sort of Asian session timing, on Thursday, we saw price sort of fizzle out and then a bearish volume enter within the market until we saw price enter the coming hours or the prior hours to our London session. And then as you can see, London session opened up, we saw some short bearish momentum and then pushed back up bullish. Market opened for the New York session, and New York session pushed price all the way down to that level again of 3,975, 78, give or take, just sort of anywhere in and around this area. Price tested this level as support, and then since then, all the way up until market close, we have seen bullish momentum and price finishing at one of our points of interest. So there's one thing that I do want to touch up on from our last technical analysis video. We spoke about everything above 4,000 we're going to accept as a bullish market. Anything below 4,000 we're going to accept as a bearish market. And as you can see, price is testing within that rough area of 4,000. So I won't say just because we're 30 pips away from 4,000 that we're now in a bullish market. Obviously, price needs to push a considerable amount away from this, either upside or downside. But we are finishing in and around this level, indicating to us that the level of 4,000 is definitely going to be a psychological level for us to take into account. So with that being said, let's go ahead and weigh up a couple possible scenarios going into next week. So obviously we are testing this level here. You can see that price has tested this level as a resistance, support again, we have, and resistance. We have tested this level that we're on multiple times, and obviously now it has become sort of this psychological level for most traders where they're looking at price. Okay, gold's trading at over $4,000 an ounce, gold's trading below $4,000 an ounce, so you know why it has a lot of psychological effect, just a simple level within the market. So if we see price react at this level as a resistance, and due to the fact that price did in fact push down to this level of 3,975, we'll exclude this level for now. And if we do see price reject off of this level of 4,000 and act as a resistance, we're going to expect price to come somewhere near to the 3,945 level. However, if we see price break through this point of interest that we have marked here and clear this most recent high, which is just on our level at 4,048, give or take, we're going to expect price to push up further, potentially somewhere around the 4,060 level, before we see sort of price react to one of our psychological levels. Obviously, we have this point of control marked in from this consolidation that we established here. Obviously, we have our value area high, our value area low, which is where price ended up coming to test, which was this sort of previous value area high and value area low / POC that we marked in last week. But we'll still take it into consideration. So obviously that level is going to be a level to take into account, the level 4,115. So they're the sort of moves that we're going to take into consideration. Obviously, we will be touching back in on our midweek so we can re-establish and give our overall bias. But at the moment, I think continued consolidation is going to be the overall main structure for gold, especially market open, as we are testing in and around that level of 4,000. I think if we move 500, 600 pips away from that level 4,000, whether that be 4,060 or whether that be 3,940, then I think then price will continue on bearish. But obviously it's these lows now that there's liquidity resting below that we need to see broken through. The same with these highs, you can see liquidity resting above these highs here. So that's just basically what we're going to expect. We're going to expect price to probably continue on consolidating for a little while until we either see a break of around 4,050 or see a break of 3,945. So regarding a post-week market review, that's pretty much all we can go over. Not much has actually happened in comparison to our midweek technical analysis. Obviously, our midweek technical analysis finished here, and as you can see, price is just consolidated within this same sort of range that we established. So not too much to go over. Not much has changed. We're still in that consolidation, in that sideways movement, and we are still testing in and around that level of 4,000. So as always, I hope you've all enjoyed. Don't forget to keep hitting that like, comment, and subscribe button. And I really, really, really appreciate this. We have finally hit 600 subscribers. I think we're just a little bit above it now. So we really, really appreciate all the support and feedback that we get from these videos. It means a ton. And obviously, liking, subscribing, and commenting helps us more than you can believe. So, or more than you can imagine, should I say. So really, really appreciate every single one of you that watch these videos, that continue to tune in and continue to drop us likes, comments, and tell your friends about us. Of course, obviously, the bigger we are, the more people we can help, and the more people we can help understand the markets. But once again, that's going to be our post-week market review. I hope you have all enjoyed, and as always, I will catch you in the next video. Peace.